Let's begin. What happened? Is it getting recorded? Okay, it is getting recorded. Yes. Okay, so welcome all to today's edition of Financial Fitness class. We are going through the foundation course for options trading. We are going through the foundation course for derivatives trading. So today, what we are going to learn is what is a put options. What we have learned so far in last 2 weeks, last week, we understood what is the derivatives trading. There is a possibility of selling first and buying later. Then we understood what is futures trading in 2 weeks ago on Tuesday. Then last week we understood what is options. Again, this is basics first, beginning steps. It's a starting of the understanding. So we have understood what is options. Last week we have understood what is call options. Now this week we are going to understand what is put options. How many of you have been attending all three? Can I have yes from all those who have attended or watched the video on what I have uploaded on YouTube? If you have gone through that video, yes. Great. If you have not, you can still attend today, try to understand the concept. I'll be sharing the link of all three webinars in the group so that you can go one by one, all three webinars and make a concept. So that will give you some concept about the derivatives trading. So let's go ahead. Before we go ahead, this is a disclaimer. Please understand that you have to learn all aspects of option. Options is a very powerful tool either way. जैसा कहते हैं ना, it is a दो धारी तलवार है. So you need to understand options and trade under some guidance for options. You have to understand that this is highly leveraged instrument and may cause unlimited losses to the trader if not done properly. So don't hold me responsible कि नहीं पढ़ाया था. I'm just trying to cover the basics. You have to study further more. We will be covering in subsequent sections some more basics. But this is a disclaimer. Don't jump into water कि नहीं देखते क्या होगा. Don't do it in options. Options is very uh, it's a powerful instrument. I would say. I would not like you to be afraid of it. So let's understand the put options. What is put options? Now, I will take you through a story to explain what is put options. So be with me. Try to imagine the story, what I'm trying to tell. Try to visualize those characters um, in your view. Try to think about those characters. Feel what they are thinking. What is their limitations? What they want to do. So once you understand that, then you will be able to understand the put options. So let's say we have two characters. The first hero is Mr. X, and the second hero is Mr. Y. Now, X uh, has a requirement. So today's date, as I said, it is 1st of December 2020. After 30 days, he has a requirement of 6 lakh rupees, approximately 6 lakh rupees. He has to pay to someone or whatever requirement maybe he has to give. He has a requirement of 6 lakh rupees after 31 days on 31st December. Okay. Now he has to arrange 6 lakh rupees. So for that, he has a diamond ring. In his hand, he has a diamond ring. That diamond ring is worth 6 lakh rupees. तो चलो काम हो गया. But the his limitation is he can only give away that ring on 31st of December, not before. He cannot sell that ring today. Today, if he goes on 1st December, if he goes and sells that ring, he will get 6 lakh rupees. Right now, that ring is having value of 6 lakh rupees. But somehow his astrologer has told, he is a strong believer in astrology, that is his problem. So he is believing in let's assume some astrologer told him that, okay, don't sell this ring till 31st December. After 31st December, whatever you do, it is okay. So you have to keep this ring till 31st December. Okay, so again, this fellow is in fix. He wants 6 lakh on 31st December. ठीक है, he can sell the ring on 31st December. That is also good. So हो जाएगा, requirement fulfill हो जाएगा. But now think or imagine or feel he is doing some technical analysis in diamond market. So he has done some analysis and he is of the view that by 31st the price of diamond ring will go down. Right now it is 6 lakh rupees. It may go down to 5 lakh 50,000. That is his analysis, technical analysis. He does some, he must have studied his past charts and all. Then he saw, okay, December it always goes down by 50, 60,000. So now his worry is when he is going to sell that ring on 31st of December, he may not get 6 lakh rupees. He's okay getting 5 lakh 90,000 also, or 6 lakh in it, because he has 5-10,000 in his pocket. But he is not okay that the ring becomes 5 lakh 50,000, 5 lakhs 40,000, something like that. Okay. So just hold on. I think someone by mistake doing lining on here. Okay. Okay. Just give me. Okay. So lines cleared. So he wants to do something about it right now. Everyone okay? Everyone, can I have yes from all of you? If you understood the requirement of Mr. X, what is his limitation, what is his requirement, what is his analysis, and he thinks that the diamond price, ring price will go down to 5 lakh 40,000, 5 lakh 50,000. So again, he will be in trouble because he needs 6 lakh rupees. Everyone okay? Can I have yes from all of you if you're clear with this situation of X? Only one person is saying yes. What happened? We are 61. Okay. Others are also. It is taking time. Okay. Okay. Now, okay, great. Thank you. So, lot of yes have come. So, gives encouragement. मैं सोचा कि एक आदमी को ही समझ में आया ऐसे कैसे हो रहा है. Now, this is the thinking of X. Now we bring in our second hero Y. Y is a diamond merchant. He purchases diamonds from people. If people take genuine diamond to him, he purchases diamond ring also from them. And whatever he does, that is his problem. His view is, yes, every year it might be going down, but this year in December, by 31st December, the price of ring may not go down. It will remain at 6 lakh rupees, or it may remain above only. So again, I'll repeat, we have Mr. X who thinks that the price will go down for the diamond ring. Y is there who thinks the price may remain same or it may go up. That is view of Mr. Y. So far so good? Great. Now X visits Y. X will go to Y. Okay, don't read. So X visits Y and he says, I'll just put a blank and I'll put my face so that everyone pays attention to what I'm trying to say. Okay, so X goes to Y and he says, see, I have this ring and will you buy it? So Y say, yes, why not? I buy the ring. So X asks him, how much will you give for this ring? He says, right now the value is 6 lakh rupees. You give me the ring, I'll give you 6 lakh rupees. Now X says, no, I want to sell it on 31st only. So if I bring on this ring on 31st, will you pay me 6 lakh rupees? So diamond merchant says, see boss, this is a diamond ring. the diamond price varies in world as per the supply, demand, and everything. The price will vary. I cannot guarantee right now that if you come on 31st, I'll be able to pay you 6 lakhs only. You can come, you can take a chance on 31st and see if whatever is the rate, I'll give you. Now X is thinking in his mind that if I come on 31st and the rate goes down, I'll be in trouble. So he says, no, 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 Mr. Y, you will have to promise me that you will give me 6 lakh rupees for this ring when I come on 31st. So what is X wanting from Y? What is X wanting from Y? What is his desire that Y should commit to X? Commitment. Yes, a promise. He wants a commitment. He wants 6 lakhs for his ring. So he wants a commitment of 6 lakhs on for 31st December. That when he comes on 31st, he should be paying. He wants a commitment. Price guarantee. Correct. So he wants a commitment. So Y says, okay, no problem. I can give a commitment, but that commitment will come with a price. I cannot give you the commitment just like that. So X says, okay, what is the commitment? What is the price of that commitment? So he says, see, we have a system in our market. I will give you in writing. I'll write and give it to you that when you will come on 31st, I will give you 6 lakhs for the ring. So I can promise you in writing that whenever when you come on 31st with this paper, I will give you the 6 lakh rupees for the ring. Very good. X is very happy. So X says, what is the cash? So Y says, the diamond merchant says to X, see, you will have to pay me 6,000 rupees for taking this promise from me. Now this fellow is wondering, yeah, I have to give diamond ring. He will give me 6 lakh rupees. Why is asking 6,000 right now from me? He says, will you give me 6 lakh 6,000 when I'll come on 31st? Are you blocking some money that I'll come? He said, no. This 6,000 rupees is simply a promise. You are buying a promise from me. You are buying a commitment from me that when you come on 31st, I will pay you 6 lakhs rupees for this ring. That means you are taking a commitment to sell this ring for 6 lakhs to me. So far, so good. So what happens is, they sign a contract. Now they don't sign the contract, both of them. What happens is, diamond merchant Y takes the contract paper, he writes on it. What he is writing? He's writing, I'm just telling for the dramatic purpose, but in actual terms also it is similar. What he's writing is, the bearer of this paper. He's not writing X name. He's only writing whoever is the bearer of this paper. If he comes to me on when he comes to me on 31st of December with this paper and the ring, I promise to pay him 6 lakh rupees for the ring. With regards, then diamond merchant's name, address, phone number, email ID, neighbor's name, dog's name, everybody's name, so that you have full detail that this is D. So this is how he has written the contract. He has written the promise. He writes the promise and gives it to X. X pays him 6,000 rupees. That's why when you are hearing on TV, have you heard the term option writers? How many of you have heard this term when you are hearing on TV discussion? Lot of options are being written at so and so place and like that. That means lot of people are promising. They are writing the contract. Like in this example, The diamond merchant wrote this promise, right? That is the writers. So those are the writers. They're writing the promise. They are giving the promise to the Mr. X. Mr. X is paying the premium to buy the promise. Okay. So now key point is X and Y have entered into contract for locking the strike price of the diamond. That means they have locked the price. What price they have? They are going to exchange the diamond ring. X paid the premium to buy the right for receiving the strike price. He will be able to sell the at the strike price for the underlying on 31st of December. Y collected the premium and he has to honor the contract on expiry. X view is that the price will definitely go down, so he wants to protect, he wants to hedge his asset value, and hence he paid the premium to buy the promise. Y thinks it will remain at the same level or go up, so he took the promise. ठीक है यार, नहीं जाएगा नीचे, आपने क्या टेंशन है. Now what has happened today? Has the transaction of diamond happened today? Is the diamond bought and sold today? As on 1st of December, has the diamond bought and sold? No. What is bought and sold? What is bought and sold today? Contract. Perfect. Today, only a contract is bought and sold. The contract, a promise to sell the ring in future. So this is called put options. Like in all call options we studied last week, put options is buying and selling of right, in which buyer buys the right to sell a underlying at a strike price. Right? In call options, what we studied last week, a buyer buys a right to sell a underlying, buys a right to uh, buys a right to buy underlying at a strike price. In put options, buyer buys the right to sell a underlying at a strike price. Everyone can make out the difference between put and call. So he's when the buyer pays the premium, he has the right for selling underline. So he has a right to sell the underline. Okay. So now let's go through one example. What may happen? So I might rewind the day. So what has happened is we are going in fast forward. Let's assume today is 31st of December. Now X opens the newspaper. In the newspaper, the rates of diamond ring will come. So X opens the newspaper and let's see what he sees. Now he opens the newspaper. The price of the diamond ring, which he was for which he has entered a contract, for which he has a right to sell that ring at 6 lakh rupees. He opens the paper and sees the current market price on 31st for that diamond ring is 4 lakh rupees. Will he be happy, sad? Will he be happy or sad? Happy, right? Very happy, because he has paid 6,000 rupees to take the promise from, he has taken the contract from Y. So he has that paper. He will take his friend, police people, diamond stock exchange people, everyone, and he will go to the merchant diamond merchant, throw the paper on his face, give the diamond ring to him, and collect 6 lakh rupees. So can I say that by entering into contract, because he gets 6 lakh rupees, he has given 6,000 rupees, so effectively he got 4 lakh 5 lakh 94,000 rupees. So for 5 lakh 94,000 rupees, he is getting a diamond ring worth of 4 lakh rupees. Sorry, he is getting a, sorry, he is instead of 4 lakh rupees, now effectively he is getting 5 lakh 94,000 rupees. So can we say, because he entered into contract, because he purchased the put contract, he was in a advantage, or he was in a profit of 1 lakh 94,000 rupees? Yes, correct. Merchant Y, the seller option, he is a obligation to execute the deal, right? So he has obligation. So by collecting 6,000 rupees, he lost 1 lakh 94,000 due to this contract. Okay. Now let's rewind again. Let's say it's 9 o'clock. X opens the newspaper. The price of diamond ring is 5 lakh 50,000. His promise, he has promise of 6 lakh rupees. Now the price is 5 lakh 50,000. Will he be happy? Still happy, and at least he has 50,000. So can we say he will go to the diamond merchant, he will give the contract, he will give the uh, ring? Just hold on, just hold on for a minute. Okay, so okay, so we are here. So he has a right to execute. He will go. He will give the contract, and he will give the ring. He will get 6 lakhs for the ring. So in the market, he could have sold only for 5 lakh 50,000. So just because he entered into contract, he was able to be in the profit of 44,000 because of the contract of 6,000. If he would have not entered into contract, he would have got only 5 lakh 50,000. The merchant Y is obliged to execute. So he gets a premium of 6,000, but then because he took the premium and he sold the promise, he'll be losing 44,000 rupees. Let's say he again in the morning, X opens the newspaper. Current market price is 5 lakh 94,000. 6,000 he paid the premium. Is he in any advantage of entering into contract? Did he gain anything by entering into contract? Okay. So Suman is saying, very interesting. Suman is saying that your arm is very irritating. However, your video is good. Request to improve that. Okay, sure. I'll work on it. Yeah, even when I listen to my videos, it's quite irritating. Okay. So he has no advantage, right? He entered into contract, he paid 6,000 rupees, he is getting 6 lakh rupees. Effectively he got 5 lakh 94,000. So no advantage of entering into the contract. Similarly for the merchant who sold this option, for him also it was no advantage. He took 6,000 rupees, but now he has to give 6 lakh rupees. So both are net. So this is very, very important in put options. When you are dealing in put options, if you are a buyer of put option, where you will be using put option is where your view is that the price is going to go down. Okay. So now, yeah, Suman, it's okay that I acknowledge, but it will take time for me to improvise. Huh? So don't expect कि immediately एकदम कल से आऊँ सब बंद हो जाएगा, ऐसा नहीं हो पाएगा. I'll try to reduce it. Yes. Okay. So input options, if your view is that the price is going to go down, you need to have a view how far it will go down, because the price, your strike price minus the premium, this is your break even point. If you want to earn in put options, the price should be going down below the strike price minus the premium, and it should go down further. If you're a seller of the put option, then you start earning only when the price ends on the expiry above the strike price minus premium, it stays above, then only you start earning. Like in the morning, if he opens the paper, the rate is 595 and the premium paid by Mr. X is 6,000. Ultimately, he lost 1,000. It is of no use to him. The entering into contract, it was not anything good to him. He lost 1,000 rupees because of entering into this contract. From this point, the put seller starts earning the money. Let's say the current market price on 31st is 6 lakh rupees. So X was not having any advantage at all by entering into contract. He would have simply come on 31st, sold it for 6 lakh rupees. So he lost entire 6,000 rupees by entering into contract. Merchant Y gained additional 6,000 rupees by entering into contract. Now he opens the paper. X opens the newspaper. The diamond ring now he can sell at 7,30,000 rupees. As he sees the price, it is mentioned 7,30,000 in the newspaper. Will he go to the diamond merchant, give him the ring, and take 6 lakh rupees for this diamond ring? So Neha is saying yes, he will go to that diamond merchant and give him the ring. Okay, how many of you think he will go to the diamond merchant and give the ring and take 6 lakh rupees? Absolutely right. He will not go to that diamond merchant. He will not give the ring to him for 6 lakh, because on contract, only diamond merchant's detail are written. Nowhere his detail are written. The diamond merchant does not know where X lives, what is the phone number of X. Diamond merchant cannot come searching for X. Okay, no, 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 no. You have to give me the ring because you have entered into the contract and I will pay you 6 lakh rupees, because X was having the contract, Y was having the money. So X only has the right to execute. He will choose not to execute, let the contract expire worthless. He can go somewhere else and sell his ring. So he, anyway, because he entered into contract, the contract money is lost. So he lost to D was 6,000 rupees. बाकी और कोई नुकसान नहीं हुआ. And what Y gained from this contract? He gained the 6,000 rupees, because he knew the price is going to go up. Anyway, this fellow will not turn up. At least let me collect 6,000 rupees. So as you can see example, the seller of put option has a possibility of losing lot of money, but his gain is limited to the premium collected while selling the put contract. Should not third line be 6 lakhs 6,000? Third line 1 2 3. No, no. The third line is 5 lakh 94,000 only. This is a put option. This is not a call option, Brijesh. The 6 lakh is the second lakh line, second last line. Okay. See, second last here, this line is second last, 6,000. This is put option. So the price goes down, the options buyer is in advantage. Options trading is buying and selling of right to execute. Put buyer pays the premium for getting the right to sell the underlying at a agreed strike price on contract expiry day. Okay, so let's see if anything else is there. Okay, buyer is okay. This is okay. Now let's see one example. Live example here, and let's get a feeling about it. Actually, I have become very cautious about the after that comment. Okay, so I may have little lower energy to speak, but okay, let me gather all my energy and come back. Okay, so give me a name. Give me a name of any share. TCS. Okay, so let's take TCS. Now let's take the TCS on the chart. For example, just for example's sake, let me hide this. Okay. Now, just for example's sake, let's say TCS is going down. This is a downtrend. We draw a line. We have done the technical analysis. Looks like it will go down, and it will go down till what point it might go down. So let's draw one support line here and see whether it's a support line in the past also or not, whether it was support line. Yeah, looks like a support line here. So let me adjust the support line. And this is a good decent support. Let me see in the past. Okay, looks okay, looks good, and it is matching as well with the bounce here. Now, this is the step number one. When you are doing the options trading, this is the step number one. Step number one is you go to the chart, talk to the chart, see what is going to happen. Now, can we all, let's say, theoretically agree that since it is in a downtrend and it has gone up, it is going down gradually. Can we have a view that it will go down till this point? Till what is the price? 3050. Can I have agreement just for sake of theoretically, only for theory sake? Let's assume we are having a view of that it will go down till 3050. Okay. Current market price is 3216. Okay, so let's draw a line at 3200. Let's say we are drawing a line at 3200 because the strike prices are in round numbers. Let's see the derivatives information. Options chain and 3200 or 3220. So these are the strike prices which are defined by the exchange. This is at the money. At the money means whichever is the near to the current market price is called at the money. So let's take 32200. Okay, 3220 is the strike price. That is a nearby current market price, and we are going thinking that it will go down to 3050. Now, second thing is in the options world, when you see the options chain, left side is for the call, right side is for the put. Now, if I go to a diamond, let's say a merchant who is trading in TCS, his view is that it will remain at 3220 or go up. My view is it will go down. I'm not saying it is my view, just we agreed for the theory sake. It is going to go down till 3050. Now, if he says, okay, I'll go to him and ask, okay, what is the premium? Now I'm discussing with the TCS merchant. I have, let's say I have one TCS share. I'm discussing with the TCS merchant. Okay, when I come to, I have one TCS share. and I'm discussing with merchant that okay, on expiry on 30 on the July end, when I'm coming to you, I want 3220 for my share. When I'm coming on the expiry day to you, I want 3220 rupees for one share of TCS. Everyone okay? Yes. How much premium I have to pay for that promise? It is here. This is the last traded price, which is 101.50. So he says, okay, if you want a promise from me that I will purchase the TCS share at 3220, you'll have to pay 101 rupees as a premium for buying that promise. Okay, then I will think here, boss, abhi hai 3216 minus 100 will be how much? 3216 minus 100 is 3116, or let's say 3220 minus 100 is 3120. Correct? So this is the current market price. This is how much premium he is taking, and my estimate is it will go down to 3050. If the price goes down to 3050 in coming for, let's say, July end, by July end, on expiry of July, if it comes down to 3050, how much will I gain? How much will I gain? नहीं यार, 3120 minus 3050, that is 70 rupees. The difference, this is the strike price minus the premium, and from here to here, whatever is the difference, that much I will be earning, that much I will be in profit. So I will be in profit of 3120 minus 3050, that is 70 rupees on a investment of, or on a premium of 100 rupees. On 100 rupees, there is a possibility, if I am correct, my view is right, and if the TCS goes down from here to here, I buy a put options for 100 rupees, then I stand to gain 70 rupees if by July end it comes here. Brokerage is peanuts. Brokerage वगैरह is 100 rupees से ऊपर भी नहीं लगेगा. This is in lots we are talking. One lot, if you change this into lots, then what is the oh, I think this is slow. Okay, आजा भाई. Okay, let it come. Let's see. So this is how we will, for any trade, typically 4 rupees is the brokerage. Roughly, if you take 4 points is the brokerage. So on 100 rupees premium paid, if my direction is true, if it comes here, then the how much is the return on 100 rupees premium paid? 70 rupees is the return possibility in 1 month. That is a 70% returns on the premium paid in 1 month. That is a possibility. Also the other way around is true. If it does not come here, then entire premium can go away. So entire 100% losses possibility is also there, and possibility of 70% profit is also there. That is why options is a very attractive thing, because the risk and rewards are very high. The risk and reward is very high. So far so good. Okay, it has not come. Anyway, brokerage kitna hai, Vikas? Brokerage is, Brijesh, brokerage is how much? If you go in Zerodha, it is, Zerodha Fires, it is 20 rupees, STT and all will be 120 rupees. 40 rupees भी समझ लो, GS, all taxes and all will be 100 rupees, 140 rupees, not more than that for the lot size. And lot size is typically, let me see, Okay, lot size nahi aa raha hai. Can someone check the lot size? Ha, here it has come. For lot size of 150. So 150 into 70, how much it will be? Let me check. 150 into 70 equal to 10,500. Out of that, you pay 120, 130 rupees as brokerage and all. Right. So for 15,000 premium you pay, you are getting 10,000 if TCS goes down to this location. So there is a possibility of earning 70% returns on the options premium, but there is a possibility of losing 100% also if it bounces from here and goes up. That's why option is you have to have a view and you should have a system to trade. That's why I said don't go and trade, just understand the things. Fine, everyone okay? So far so good. Can I have yes from all of you if you have understood the concepts, the basic concept of put? Okay, great. So any questions? This brings us to the end of today's session. I don't want to extend it too much. I want people to digest the concept. Maybe you can go back and watch the session again, and then we go ahead. I'll be taking some Greeks also, delta, gamma, theta, and vega in the next session sometime. Yeah, I'll try to cover the basics, like the Greeks of the options. Okay, any questions? Anyone has any questions? Okay, yeah, Vikas, go ahead. You can unmute yourself. I'll allow you to unmute.
Yeah, hi Samir. My question is you have
Your
covered
voice is
this.
not clear, Vikas, or my.
I'm saying you have covered this
Uh-huh.
from the what do you call contract buyer point of view. They'll say I'm buying a put option. Okay.
Uh-huh.
But if you go from the contract seller's point of view, because I could be buyer as well as seller,
Absolutely.
that things will be totally 180-degree opposite, right?
That see, it is not 180-degree opposite. Right now, we did a technical analysis. We picked up TCS, correct?
Mhm.
TCS, when we did technical analysis, definitely this is not a bullish setup.
Agreed.
So that's why we took our view as a bearish view. When we are having a bearish view and we are talking about the port, I took that buyer's point of view. If you have
Correct.
any stock in your mind which is having a bullish view right now, we can take from the seller's point of view also.
Okay.
First is view. See, in options, the most important is the view. First is technical analysis. Based on technical analysis, you should have a view what is likely to happen. Then only you will
Mhm.
decide to become whether you want to sell or you want to buy. If your view is,
Mhm.
it is, let's say, okay, Brajesh is giving an M&M. Let's take M&M. Mahindra and Mahindra. Okay, so let it come. I don't know why. I think net is low. Okay, so here the M&M is going up. Let's have a trend line. This is a good example. Okay, now this is likely to go up. Can we agree?
Mhm. Yeah.
Can we agree that this will likely, even if it comes down, let's say it is likely to come here till this level, come down here, take a bounce and go up. This is, can we take
Mhm.
this as support level?
Mhm. Correct.
So what is your view is that it will stay above 1041.
Mhm.
Now what you will do?
I'll prefer call option.
No. Today's class is put option. So
No,
let's talk.
agreed, agreed. So if it is like that, I'll try to sell the put option.
So see now what has changed, because first what we did was we did a technical analysis. First we developed a view. So in options trading, it is important that we have a view. Once we have a view, then we can go and trade. Okay, ठीक है, अभी मुझे लगता है कि it will go up or it will not go down below 1040. So I can go in M&M, Mahindra and Mahindra, go to derivatives, go to options chain, and what was our level? 1041. Okay, so we have 1041. So this is the 1040 strike price. So you can collect 21 rupees if you want to sell put. If your view is it is going to go bullish, you can collect 21.8 rupees for this strike price.
Yeah, I got it. I got that. What I'm saying,
Ah.
if I have to buy a contract, say put contract, I have to buy. Okay, because I know the price is likely to go down, and I want to protect my this thing. Then there has to be a seller, right? Then only I can buy a contract.
There are sellers.
And yeah, there are sellers, right? So similarly, there has to be buyer, there has to be seller. So from the buyer point of view, your what do you call inputs are absolutely correct. I appreciate that. What I'm saying is that because when I'm buying, there is somebody selling. From seller's point of view, it becomes totally opposite. That is what was my submission. That's all. Because I'm buying, you are selling, for example. Now, when you are selling, for you, from your angle, it becomes totally ulta. That's what I was saying.
Okay, fine. So
yeah, that's what. Nothing. Yeah.
Got your point. Yeah.
But it's good.
Yeah. Okay. Great. So it's a view. First and foremost is we should have a view. Whether we are a seller or buyer, if we have a view, we can trade accordingly. That's why view, having a view, what is likely to happen and what is not likely to happen for next 10 to 12 days or till expiry is very, very important. Okay, Sanjeev, what you're saying, Nifty or Bank Nifty? Let's say Nifty. Okay, so what is your view may happen to Nifty? Sanjeev?
Tomorrow it will fall.
हाँ तो फिर put buy कर लेना चाहिए हमको. If it is going down, we can buy.
Because today the Dow Jones is around 700-800 points down, so it's likely to go.
Okay, so this is the resistance level for your Nifty. So it went and it came down. So this is a resistance level. So it will find it difficult. Maybe Dow Jones will.
Yeah, it is likely to be range bound for few days. That is what is my assessment.
Yeah. Fine. So this is what put is. So I would request everyone to go through the example, whatever we have further recorded. Everything is recorded. You can go through the recording as well, understand the put, and then we'll build upon it further. So before we build upon it further, we'll go through some technical analysis also for next 1 or 2 weeks, so that we have a view and then we can understand it much better. So thanks a lot. Thank you for joining today. I hope you learned a new topic, new understanding today. So see you on coming Tuesday. Thanks a lot for joining.